Major funding for these broadcasts has been provided by grants from New York Community Bank, M&T Bank, PBM, Customers Bank, Collins Building Services, AmTrust Title Insurance Company, Marks Paneth, Capital One Bank. Additional funding for these broadcasts has been provided by grants from Amerant Bank, Bank of America, Citizens Bank, Dime Community Bank, Douglaston Development Levine Builders, Flushing Bank, Friedman LLP, Handro Properties LLC Handler Real Estate Organization, Hodges Ward Elliott Inc., Investors Bank, James D. Kuhn Real Estate Institute at Syracuse University, John Catsimatidis Red Apple Group, Keysight Capital Partners, New Banks, Meridian Capital Group, Ocean First Bank, People's United Bank, RPW Group, TD Bank, and these friends. One industry which has been affected most hard is the hospitality industry, the hotels and the restaurant business. So today I've assembled a group of individuals who are happy to discuss the outlook, the challenges, and the opportunities in the hospitality and the restaurant business. My guests today include Brad Honigfeld, the founder and chairman and co-CEO of the Briad organization. Brennan Keating, our lender, who is the administrative vice president, specialty financing for M&T Bank. Also, we have Kurt Keese, who is a partner and a member of the executive committee of the firm of Marks Paneth LLP. And last but not least, Mark Stebbins, who is the chairman and CEO of Procon and the manager of XSS Hotels. So, Mr. Keating, you must be a little busy over the last year. How do you see the future? Where do you see the opportunities today?
Well, I mean, yeah, to say we've been busy is an understatement. But it's not the good kind of busy. It's been very challenging. It's hard to see, the strain and stress that's been on the hotel portfolio and with the clients that we have. So, anytime you get anyone from M&T on one of these meetings, you're going to hear the same story about we're relationship lenders and we've kind of lent to people through the cycle. So this cycle has been much longer and deeper than we've seen in the past. And, the opportunities I see are really just getting through this. So I'm looking at a lot of the things that we're doing for our clients through this period, really trying to bridge ourselves to the cash flow, which we hopefully will see, coming to return end of this year and, or by 2022. So most of my time is spent on the existing portfolio. That's really where I see the opportunities right now.
Mark, a couple of months ago, I think you purchased a hotel from a bank's portfolio, and you want to change the nature of the hotel. I think it had 420 rooms. You're planning to drop it down to 220. As a hotel developer, operator, and a manager, where do you see the opportunities? And talk about that transaction that you bought up in New England.
First of all, I agree with Brennan that M&T is a relationship bank. We have a lot of loans with M&T, their Boston office, and they've been very, very good to work with. They are in the process of buying People's Bank, and People's Bank was the one who had the loan on the property we bought in Franklin, Massachusetts. It's a big old building that looks like a castle. It's well past its prime. It's too big. It's got about 80,000 square feet of meeting space. And we're going to take it and repurpose it, turn a third of it into senior housing, which is another business we're in, and take the rest of it, so a little over 200 rooms, and re decorate them and bring them up to date, as well as the lobby and the conference center, so people feel like they're in a modern facility. We bought the paper, we didn't buy the building, and then we foreclosed on the building. There's been a lot of money raised in the last 6 months for people to go out, for groups like ours to go out and buy distressed property. But frankly, distressed property, because of a lot of the banks and the PPP money, hasn't been available. There haven't been many distressed properties available. We bought one in Miami, and we got the one up in Franklin, and we're just happy to have those. What I think we see as the opportunity is that it is going to take a lot of our competition out of the market. A lot of hotel developers in the medium term are going to be devastated and out of the market. We had a very strong capital base and have been relatively conservative, and we think the next few years are going to be, we're primarily based in the Boston market, and we think it's going to be a great market going forward.
Kurt, you know, I think you were quoted once in an article, a landlord is often referred to as a silent partner in a business. Some of your landlords today, especially for your tenants and clients who are in the restaurant business, that's totally true. How do you see are there opportunities for people in the restaurant business? Because we're going to talk to Brad about it, because he's also heavily into the hospitality market.
Thanks, Michael, for having me. Yeah, I wrote that back probably last May, and I saw it as an opportunity for people in restaurants to renegotiate and change their leases if they could. And for a lot of my clients, that's happened. Landlords have been accommodating to restaurants. They understand the PPP money. Everybody understands that now pretty well. PPP 2 is just coming out. And for most of my clients, most of these restaurants, they've done a good job with their landlords, and the landlords have understand obviously the difficulties with operating, especially in New York City. The suburbs, it's been a little easier with occupancy at 50% or better sometimes. But I also really do believe there's a big difference between a small building and a big building. In a small building, that restaurant was paying the mortgage. In a big building, that restaurant might have been extra money, you know, sure, it might not have made the difference between making the mortgage payment or not, but it depends who your landlord is, and a lot of restaurants did and have renegotiated, and there are a lot of people looking actually to open restaurants again in new spaces and new deals with new landlords. So,
Brad, as I was saying, you've been, for your entire career, have been involved with the restaurant business. Okay, so of the restaurants, which ones are doing well in your portfolio, and which ones do you believe have the best opportunities for growth in the future, now that we have a vaccine?
Well, it's obviously been a complete challenge, from many, standpoints. We're, 108 Wendy's, which have performed extremely well during the pandemic. And I think when lenders such as M&T, Bank of America, look at the industry, that is going to be an industry of QSR that I think a number of banks are going to really back, because provided that you've had a drive-through, it was an essential business, and our margins have improved as a result of the dining rooms primarily being closed, and I don't see them opening for some period of time. And when they do, I think there's going to be a new mousetrap, because we're probably doing 20 to 25% of our business now through Uber Eats, DoorDash, and all the delivery services. So, it's going to be, hopefully that will continue to grow. Wendy's also got into breakfast. So I'm very bullish on the Wendy's business, and we had a great January, up 11.5%, and February was really tough. And it's, March, we'll see where things are at. So that's for sure been a bright spot. I will tell you, while I was in the Fridays business for 27 years and I'm no longer in that business, a gentleman that came along and actually is financed by M&T Bank, and he's got a casual dining concept that primarily serves the Fridays type of menu, but really with pizza and sushi. And he is doing terrific. And sushi is one of the largest takeout items in casual dining. So once you kind of think that things are just dead in the restaurant space, he is a tenant of mine in Clifton, New Jersey, in the shopping center that I own. And we're converting a Zimburger that we had that does not work on a $20 check average at 25 or 30% occupancy, but and burgers don't carry well. So we're converting our Bridgewater store, and I'm a partner with him. But he's got a good mousetrap. So I believe that the restaurant business will continue to be reinvented. I do think that the bias will be towards QSR, lending, and we see Chipotle doing Chipotle lanes and Starbucks. That's kind of really what has come out of the pandemic.
What about the topic of repurposing of facilities? I mean, there is discussion in the New York market, and Brennan, your majority of your portfolios in New York are thinking of taking some hotel rooms and converting them to offices and to residential.
I mean, for the short term, a number of our clients have converted to, renting rooms out to shelters. So if your hotel was located in an area that was, entirely dependent on business travel, for the most part, we've been supportive of that because, business travel has not come back. The travel that is in place now is leisure. So if you're not in a leisure market, owners are going to have to do what they can to survive right now. That being said, there are going to be some properties that may never come back as hotels, and having the alternatives to move to low-income housing or have a component of that in the hotel will probably be the outcome for some of these hotel properties. So, and to Mark's point that he made at the beginning, a lot of the distress that's out there right now are properties that were kind of in distress going into COVID. The ones that were kind of strong going into COVID seem to be surviving. So, with the relief that the banks and through PPP have been able to provide. So I think those will probably be some of the ones that you see, converting to alternative uses.
Kurt?
Well, I do a few hotels here in New York City. I have one client who lost a major operator in a building. That building now is vacant. So it's downtown New York. The conversion to residential seems to be a huge undertaking, and not sure if it's worth the cost benefit at this stage. So I think that needs to be seen as what comes back and what doesn't come back. I did hear, and I don't know exactly where it is, also in New York City, that one restaurant operator located in a hotel took over the first and second floor and made them private dining rooms in these empty hotel rooms. So people could feel separated, which I thought was a fascinating idea to increase your occupancy density and things like that. So I don't have a huge hotel practice, but I thought that those were two interesting things that I saw.
Okay, one of the big topics over the last 15 years, but really over the last 2 years, has been Airbnb in the hospitality industry. What are the thoughts of my hoteliers, Brad and Mark, with regard to Airbnb in the future and its effect on the hospitality business in general?
I mean, from my perspective, when you look at Airbnb being an $85 billion to $100 billion market cap in Marriott, obviously we unfortunately just lost our CEO, who was a terrific gentleman, Arne Sorensen. And Tony Capilano has a big job ahead of him, along with Stephanie and Liam Brown and the leaders of Marriott. And I think that they will, engage with our, the franchisees and owners. And I think that we may need to be more active. You think about it, Airbnb really doesn't have any hard assets, yet their market cap is where it is. Marriott has $50 billion, market cap and has a tremendous amount of hard assets. So I don't know. I mean, I would not be surprised if I was Airbnb to say, where could I, use my balance sheet to go out and buy some hard assets. So, just as there are some banking mergers and acquisitions as M&T is making, you may see that in the hotel business in some form or way, coming soon. So, TBD. But I'm bullish on hotels and hotels that are in the 100 to 150 rooms, and also hotels that have rooftops as a point of differentiation in specific markets.
Before I ask Mark to answer the question, I know that hotels, Airbnb bought, I believe in December of last year, Hotels Now. So they went into the reservation system business in a different world, leaving their traditional market from the individual's home or room. Mark?
So Airbnb is not a profitable venture at this point, and frankly, they're competing unfairly. Us hoteliers have to have handicap accessibility and all sorts of rules, laws that go along with us. When you rent an apartment out, it doesn't come with that, with those rules and regulations and oversight. So there's a lot of rezoning, rethinking that has to go on. Friends of mine have lived in apartments, very expensive apartments next to Airbnb apartments, and there's no oversight in that. You can have a party of 50, in a 4-bedroom apartment, and bother all the other tenants in the apartment complex. So I think Airbnb has a long way to go. I think it makes a lot of sense in far-flung places, but I don't think it makes sense in the urban areas where there are hotels and where they're taking apartments and doing short-term rentals. A lot of New York and Boston and numerous other municipalities have started making rules and regulations about this. And the hard part is going to be enforcing those rules and regulations. But I think the day will come. I think there is a place for an Airbnb, but I think the more it spreads its wings, the more it's going to be regulated.
With regard to certain hotels, Brad and Mark are building certain hotels today. Due to the pandemic, have you changed the way that you were planning or to develop the hotel? For example, I know that Brennan had a construction loan, which they no longer had as a permanent at the JFK, at the TWA at the JFK airport, where a significant portion of the revenues were predicated on weddings, bar mitzvahs, and other major events. I don't see people returning that fast to these big events. Brad?
Actually, we've had one pretty much that M&T financed graciously for us in Bridgewater, New Jersey. It's an AC by Marriott. I think the second one in the States, 150 rooms. We had opened up just in March, cut the ribbon, and COVID hit. I think the first month we did 50%. And it's a beautiful property. It has a restaurant, it had a Zimberger next to it adjacent. It's going to be now a Tommy's Tav and Tap. And we have a rooftop that's been vacant. So we took this year to really, the guts of the building were there, but I wasn't really happy with it. I come out of the Marriott business, been with Marriott for 41 years in some form or shape. And so we really spent probably another $1 million to really find the right designer that's out of Los Angeles, and John Sophia, who came in and redid this with us. And it just looks outstanding. I mean, there's still some details that I want to continue to refine and get done. And then in San Diego, we're under construction with an AC by Marriott and the gas lamp. It only took me 8 years to get the approvals. I had owned the building for some period of time, but that's going to have a small club on the bottom, and it's going to have a rooftop with a bar and a pool and sort of a club up there. So I think these venues in certain areas give a point of differentiation for business, and for us to be able to sell, especially around Teterboro Airport, where there are a lot of hotels in the Meadowlands and things like that.
Mark?
So, Michael, I don't agree that bar mitzvahs, weddings, big gatherings are going away. Frankly, in one of our hotels, we have 30 weddings booked for this year. And last year we had 25 weddings booked in the same hotel. Now, albeit they were smaller because the government, the governors have regulated how many people. But I honestly think we're going to see a very quick comeback in weddings, bar mitzvahs, etc. The big issue is going to be the big business convention. And those hotels, I think, will take a little longer to come back. But I'm a president of one of the franchise advisory councils for Marriott, and we just had a discussion, and we're going to have this fall going to have a big meeting and we're going to lead the way. I think those will come back. We're social animals. People need to get together. I see a lot of in our area, the Boston area, a lot of the CEOs saying, you know what, this work from home thing is cool, but it ain't gonna last. You're gonna have to come back to work. And I think the same thing with the conventions. We can do these Zoom type things like we're doing right now with you, but that ain't gonna last. The minute the herd immunity comes about, we're gonna see people getting together in mass again.
With regard to the topic of ghost kitchens, you're seeing kitchens off-site being delivered, and as Brad said earlier about Uber Eats. So what's your thought, Kurt? Any thoughts about the ghost kitchens?
Yeah, it's been coming around more. I have a few people doing things like that. I do think with the takeout world now, everything's takeout, that these ghost kitchens are becoming more popular. I've had clients in the past that have done strictly takeout also, and that didn't work. It's working very well right now, and these ghost kitchens are popping up. They're not big tenants, I don't think. I think they're all short-term leases and not a lot of security behind them. But it depends about the product. And in today's world, younger people are very much foodies. My daughters are always taking photos of food and tracking food. And if some pop-up shows up and they're the hot trend, people order and Uber Eats and all this goes on, and it gets from this ghost kitchen to your house. And it seems to work. It fills a little space there.
What about the limited service hotels? There have been a number of articles and discussions that the limited service hotels and the suite hotels are really doing better today. Is that a reality, and what about the future on that? Mark or Brad?
I'm very encouraged. I think last weekend, 3 of our hotels had sellouts. We are seeing in certain markets that we have a number of weddings that have booked for June, July, and August. Cautiously optimistic that the wild card here is the business travel, right? I think, with 25 million people being vaccinated, I am a huge proponent walking around my own office. I am on a warpath to get my office open. I do believe, I think CEOs have to lead, and we as business leaders, it's a very tricky thing whether we can mandate. And I think that for younger people, it's impossible for them to learn by Zoom. And we were finding a lot of people retiring earlier because of the pandemic. And if we don't train younger people now, we're just going to be behind the 8 ball.
Mark?
What you were calling suite hotels, we call extended stay hotels.
Right.
And the extended stay hotels have done so much better during the pandemic than all the other hotels. And that's because they all come with kitchens. And, you know, as we know, a lot of restaurants weren't open. So when people were traveling, they would go to the grocery store and bring in their own food and cook them right in the hotel versus searching high and low for restaurants. The days back to the full service versus the limited service, select service hotels, I think the days of the big hotels with room service and that being cool are gone. You know, it just costs too much money to service, to man the room service. Our issue really is in the hospitality, which includes restaurant and hotel, is the cost of labor.
Okay.
And so we have to watch that very closely, and those limited service hotels do a lot better job of limiting labor.
To discuss everything in the hospitality and the restaurant business would take an hour or 2 hours, but unfortunately our time is up. And I'd like to thank Brad, Brennan, Kurt, and Mark, and hopefully my apple, which was dull a little while ago before we started, is getting a little shinier, and hopefully we'll see a good year for 2021. Thanks for being here.
Thank you.
Thank you,
Thank you.
Michael.